Hey guys, Boris Losberg from BK. Great to be with you. It's been a long time. I've been on the road, so time to get back to our weekly videos and catch up with the intraday price action. Before I start, as always, please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategies contained in this video. As always, do your own research. So, really interesting week in scalp land for me this week. I'm going to pull up the chart. Hang on. Here's the Eurodollar chart. I think I'm just going to focus this week primarily on the euro and show you all of my scalp trades there, because the key thing that I want to show you is that there is not just one standard way to scalp throughout the day. And more importantly, I think I also want to explain to you the whole idea of scalping should really have the proper mindset expectations. Generally, when people think about scalping, we're talking about maybe 10, 5, 15, 1 minute type of increments. When in fact, to properly intraday trade in FX, because it's a spread-based market, because you cannot make bid-ask, these type of very short-term trades I think are almost impossible to make money on, because the spread itself puts a very negative edge on your trading. So what you see with me is that generally I try and do sort of positional intraday trades. Sometimes my trades last as little as 15 to 20 minutes, but generally they last several hours. So this isn't a very quick in and out type of a situation. It's really more of a positional intraday situation that I practice every single day. I think that's the sweet spot of where you want to be if you want to be a short-term trader. So let's start just by taking a look at the Eurodollar this week. And you see that there's a whole bunch of variety of flow trades that I do. The critical thing here, of course, as always, I trade only one way, which is with the flow, with the movement of the market. I never try to pick tops and bottoms. I always actually try and go with the strength of the price action, because that tends to be where the edge lies. So in this particular case, this is a standard long scalp trade where basically we're coming in. Is it? No. My apologies. Hang on a second. I think this is. No, this is a standard. This is a setup that I've did a variance on from my long scalp setup, which is basically where I take the OO. I take the break of the OO for a 25-point target with a 50-point stop. The other very interesting thing for those of you who are watching this video for the first time, or who are sort of new to all of my setups, is that I'm always trading with a negative risk-to-reward ratio. Typically, it's 1 to 2. Sometimes it's a little bit less than 1 to 2. I know that sounds absolutely insane, but in fact, that's the reality of life. The market, what they teach you in trading books is not how you really can make money in the market. You cannot have risk 10 points and make 100 points and expect that to happen more than 1 in a million times. The whole idea of the market is that because it moves back and forth so much, because there's so much friction and slippage both ways, it's almost impossible to create anything better than a 1-to-1 risk-reward ratio. And if you're looking for longer-term trades with a higher level of expectancy, you generally want to have more than a 1-to-1 risk-reward ratio. 1 to 2 tends to work well for me. That is actually the maximum. I really would say, of course, you cannot risk more than 2 to 1 because at that point, the risk-reward becomes so negatively skewed, you really almost have to win every time in order to be positive. But in that situation, if you're 70% positive, you're net positive, you work a lot for effectively, basically the idea here is you make 10 trades and you make 25 pips at 10 trades, but that is real life. You don't get paid, millions of dollars for 1 minute's worth of work. Same thing in the market. You don't get paid millions of pips for 1 minute's worth of trading. So the variance in this setup is basically take the OO for 25 target, 50-point stop. This one, of course, works very well. This then continues to be a long scalp setup where basically I'm taking the standard way, which is 65 onto the long side to the OO. And that's a classic long scalp setup, and that works very well as well here. What's interesting here that I want to show you is this is a 15-minute chart, of course, right? So this setup took 1, 2, 3, 4, 5, about an hour's worth of time for me to actualize. This one was very fast. It was really a 15-minute setup. This setup, which is a break of the 44s, look how long it meanders. It meanders, it starts out at 4 o'clock in the morning, right? And it meanders all the way through the European session, really never kind of makes it up to the through the 44 level. Almost takes me out to a stop out here in the to the 43.60, but I managed to survive it. This is yet another reason for why it's so important to have such a wide stop, a 2-to-1 stop, because what happens here is that if you had a short stop, you would have been stopped out, you would have had to come back into the trade, and you would have had a net, essentially a negative trade. Whereas here, by allowing yourself to have a generous amount of stoppage, you're not, you don't have a drawdown in this particular trade. So and nearly come out to a stop. It continues all the way through till 2 o'clock in the afternoon, New York time, 3 o'clock, 4 o'clock. Fully 12 and a half hours later into Asia, we finally break above into the 45, into the 44.25s, and the setup gets made. So the key thing here is sometimes the scalp setup requires a tremendous amount of patience. So onward and upward throughout the week, I short the 44s to the downside here as I come on into the European session and get stopped out. But the trade again turns negative into the North American session. And here I make my money on the plus 25. So you can see I'm sort of working with this setup continuously, and it's working more or less as the way it should. Generally, the idea here is if you can make 3 winners to 1 loser, you are net positive. This particular trade here is an interesting trade. This is where the long scalp actually fails. This is a grease downgrade into the North American session after a massive sell-off into the U.S. equity markets. And I'm thinking, yeah, they're really going to test the 4,300. Well, they come close. They come close, but they don't quite make it to the 4,300 level. And as the day builds, momentum builds against me, I get tagged out. But no worries. That's markets. That's the whole idea. You're going to make some trades. You're going to lose others. I quickly flip around to the 44 handle because since the momentum has really turned quite the opposite way, and I make the 44.25 right up here, as you can see on the next trade. So we make lemonade with lemons. Now, as I proceed into the let me see which session is this. This is yesterday's trade. I take the 45s. This is an interesting trade. Again, take the 45s on the break of the 45s, and as you can see here, this is really interesting. Again, tremendous amount of patience. This is 12 noon New York time. I basically go through all of the New York session, all of the pre-NFP session in Asia, where there's absolutely no action that happens. In Asia, I do come close, but don't quite make the 25s. The other thing that I kind of want to emphasize here is that I hold the setup make or break. In other words, it's got to make my target or make my stop. I do not adjust it because that's when you start to screw around with your risk-reward ratios and you actually begin to really mess up your setup. You play your cards as they're dealt. You don't try to get cute. Eventually, though, as you can see, NFPs does come out negative, and I'm able to make my 25s on the break of the 45s. And then, of course, the price action gets much more interesting. We get a move to the downside, but here I try to test the 45.50 break to the downside. It doesn't make it. So it's a perfect example where the flow does not come all the way down to my entry level. And thank God, because actually the price action turns itself around completely. I make a note on my Twitter telling everybody that if the grease situation turns positive, then we're actually going to turn positive in the euro, and it's exactly what happens. Here I take the 45 break back up to the, I take the 45.50 to the 45.75. Again, another play on the flow. That's another one. It's another variant that you guys could use. You either take the break of the OOs or take the break of the 50s. Both of those strategies have worked very well in the euro. I've backtested both of them over the last year, and they've worked quite well. But ultimately, the trade that and I don't actually have this trade on this particular account, but I traded my other account. The long scalp setup from 65 to the 46, as everybody saw that I posted on my Twitter, works very, very well. Furthermore, if you can see here, I'm also side trading the Aussie, and of course the let's put this over here. The Aussie long scalp setup works like a dream in the risk on section of the post NFP trade when we take the 106. By the way, if you looked down here, the risk off situation would have given you a very nice long scalp to the downside. I didn't take it because I was just too busy with other trades. But here, risk on turns on, and we go 65 to 07, and of course, Aussie gets taken out at that level very nicely. So the bottom line is there are a million different ways you can trade flow. The classic standard way, take the 65 to the OOs with a OO stop. You're making 35 with a 65 risk. Another variant is to take the OO break for plus 25 minus 50. Yet another variant is to take the 50 break for plus 25 minus 50. Whichever way you slice it or dice it, I hope you guys have a great time trading the flow every single day. And as always, follow me on Twitter at fxflow.com, where every single day I try to bank pips for everybody. I wish you guys the best of luck and the best of trading, and I'll see you guys next week.